Good morning, everyone, and thank you so much for attending this District Society session, which is titled Accountant Role in Corporate Governance. My name is O.SHARAFA, and of course, I'm a chartered accountant, and of course, I'm also a researcher within the Accounting and Finance Department of London South Bank University. My core area of research sits within corporate governance. So I'm delighted to speak to you today about the role of accountants within governance context. More importantly, I think I should thank the District Society for giving me this opportunity to share my thoughts with you and to sort of uh, put in forward to you that you as an accountant have significant role to play within companies governance framework. To speak to you today, it is my intention to cover a bit of background within corporate governance, that is just to set some background within the scope of corporate governance. And then I'll make an attempt to define what corporate governance is. I will tell you a little bit about what I like to refer to as governance is king. Then we will theorize governance. That is, as researchers, we like to speak so much about theory. So I will, sort of explain some few or two key corporate governance theory. Of course, we will also look at why do business exist? Because all of this that we're talking about is about businesses, and therefore there is need to briefly understand the purpose of business or why business actually exists. Then we will then tie this together by speaking around what role does accountant play in corporate governance. Then I will be closing by sharing some of my own reflection or my personal reflection with you, drawing from contributions of renowned institutions. And then I would like to take some question and answer, and this is my expectation that you will be keeping in touch at the end of this session. So this is how we're going to go. We start by talking about introduction and background setting to governance. I'll be stopping along the way to look at some of our charts, and I will definitely go on. Sorry, I think there's a mistake in the password. I think the password is icon-oba, not oba-icon. Oh, my apologies. I think the password is icon. The password to join this meeting is icon-oba. My apologies. I think that's my error. Okay, let's continue. The session is recorded, and I'm sure that members of the district will have access to the recording. So let's set some background in corporate governance. Shield 2008 speaks about corporate governance, and it says good governance is a must for today's complex and dynamic business environment to ensure long-term sustainability. So when we speak about governance, or when we speak about companies' long-term sustainability, it's very interesting, or it's very nice to touch base on the word corporate governance. What that simply means is that when we are looking at company in long-term context, then we can't ignore the concept of corporate governance. But when we're looking at company in short-term context, then perhaps you might not worry yourself so much about the word corporate governance. And as an accountant, you know what that means, that when a company is operating in long-term context, then you are talking about a going concern concept. But when a company is, not looking into the future, then you're talking about preparing accounts on breakup basis. But when we look at governance in the long-term context, then we are talking about the concept or the subject corporate governance become relevant. And the purpose of corporate governance is to facilitate effective entrepreneurial and prudent management that can deliver the long-term success of a company. And this was said by the UK Corporate Governance Code 2018, that companies, the corporate governance, the essence of it is to facilitate effective entrepreneurial and prudent management. I've underlined the word prudent management because you and I know the role accountant plays when it comes to the prudent management of fund or limited resources available to any organization. And it sits very close to my heart, the word put together by the Institute of Chartered Accountants England and Wales, when they say that getting governance right is essential to building public trust in corporation. And I would like to ask you, what other roles or what other responsibility do we have as an accountant other than helping corporation to build trust?
Please, we already have many of our...
So helping corporation to build trust. So this is part of what we speak as an accountant, or this is part of our responsibility as an accountant. Okay, so the Nigerian Corporate Governance Code says, and I'd like to refer to what it says here. It says, corporate governance is a key driver of corporate accountability and business prosperity. Here again, the word accountability also reflects. Okay, so when we speak about governance, we speak about key drivers of corporate accountability and business prosperity. And don't forget again, at the beginning of this lecture, I mentioned the word going concern. How else would you define going concern other than business prosperity? So governance involves balancing the interests of a company, many shareholders, and many stakeholders such as shareholders, employee management, customers, suppliers, financials, and the community. The Institute of Chartered Accountants England and Wales also refers to governance involving the balancing of the interests of what? Of various stakeholders. So it is important for us as an accountant that we need to understand the role that we play when it comes to balancing the interests of stakeholders, because our role here is very key. It's all about trust. It's all about building trust. It's all about transparency. It's all about accountability. It's all about the interest of all these stakeholders, in which the financial reporting or the corporate reporting is a very strong mechanism in which stakeholders can build trust in various organizations. That is, the accounting report that we prepare as an accountant, the report that we put together and we prepare as an accountant, is a strong communication tool for stakeholders to see or to be able to understand how the company is being directed and management, whether or not the company is being run in their own various interests. So having set the background of corporate governance, both drawing from the Nigerian Corporate Governance Code, also drawing from relevant institution and what this institution has said, what is corporate governance? What exactly is corporate governance? Sir Andrew Cadbury looked at corporate governance as a subject that concerns withholding the balance between economic and social goals and between individuals and communal goals. That is, the aim to align as near as possible the interests of individual, corporation, and society. So one of the key contributions of Andrew Cadbury in 1999 is that corporate governance is a system by which a company is directed and controlled, but as near as possible, trying to balance the interests of individuals, corporation, and society. So I kept on referring to the alignment of interest. And the reason why I do this is for you as an accountant, either in practice or accountant in business, to understand that when we speak about governance, we're not necessarily speaking about responsibility to shareholders. We're not speaking about responsibility to the board. We're not speaking about responsibility to your line manager within the internal control department alone. We're not speaking about your responsibility to Financial Reporting Council alone. We're not speaking about your responsibility to compliance to CAMA or to compliance to IFRS. We're speaking about a collective responsibility to all the stakeholders. And when accountants do this, that is where we say that corporate governance is what the accountant is doing. That's where we say the accountant is involved in what we call governance. And this is the same view that the OECD in 1999 also holds. It says a set of relationships between a company board, its shareholders, and other stakeholders. So what that means is that as an accountant, when we speak about governance, we're not talking about what we do only to the board. We're not talking about our responsibility to the board, but we're talking about relationship that exists between us as an accountant, the shareholders, the board, and that of the stakeholders. And also personally, and very recently, I also attempt to define corporate governance. I sort of define it as a system by which an entity established to create value. Okay, I use the word value creation because obviously there's no point that we are here. There's no need for an accountant to spend much time in an organization who is not interested in creating value. The essence of actually being in existence in the first instance is to create value, either to create value to shareholders or to stakeholders or to the environment. So accountants working in an establishment which intends to create value should be much concerned about how that organization is direct and controlled, paying due regards to factors such as environmental, social, and governance. I mean, you can see one of our past presidents there, so he didn't join me in the definition, but I've just put that picture there. Well, just not to digress too much, the definition of the way we sort of seen corporate governance in this 21st century is much more consistent to the thinking of Edward Friedman, who sort of looked at corporate governance, or who sort of looked at corporate governance from the lenses of managing for stakeholder theory. And what the theory tries to, or what Friedman tries to put forward is for us to understand that unless as accountants, unless as governance professionals, we are willing to balance the interests of all stakeholders, if we do anything possible, we do everything possible to balance the interests of stakeholders. That is, we're concerned about our shareholders, we're concerned about our customers, we're concerned about our financiers, we're concerned about the management, the board, we're concerned about our regulator. That balancing of the interests of all stakeholders is where value creation ticks, and that is where we say there is governance is taking place. So this is a view that Edward Friedman actually put forward in his theory called managing for stakeholders. For example, what is currently happening in Nigeria is simple. It's just a case where the interests of all stakeholders are not balanced. Do you see what I mean? So anytime you have a situation where interests of stakeholders are not balanced, this is an example of what we will see. We're going to see crisis. We're going to see a situation where one of the stakeholders will withdraw trust in those that are in charge of governance, and then they will want to be the custodian of governance themselves. That's exactly what we're seeing here, is a situation whereby the interest of all the stakeholders, citizens, for example, felt that their interest is not taken into account by those who are in charge of governance. And this is a complete trust issue. Okay, and then what do we see in response? We see in response that those that are in governance start coming out, start talking, they start giving records, start giving accountability. So we can see what is going on. Anytime that there is a governance issues, okay, so or where the interests of stakeholders are not balanced, this is what we get. We get crisis, we get a situation whereby there's withdrawal of trust. So what do I refer to as governance is king? Professor Marvin King also put some thinking together, or also is known for his work around integrated thinking, and also the pioneer of corporate governance code in South Africa. And also the chairman of, formerly, he was the formal chairman for Integrated Reporting Council. So Professor Marvin King is also a professor of governance. And in his word, he defined corporate governance in his South Africa corporate governance code. He defined corporate governance as an exercise of ethical and effective leadership by which governing body towards the achievement of the following governance outcome: ethical culture, good performance, effective control, and legitimacy are key themes linked to corporate governance. So, for example, you as an accountant, or all of us as an accountant, we know what it means to speak about ethical culture. Our profession completely require us to observe what we call professional ethics. So there's professional ethics that we have to observe, and I can, for example, continue to advocate for these professional ethics, because the Institute of Chartered Accountants remind all of us as accountants that we represent icon anywhere we go. As chartered accountant, we need to uphold professional ethics. We need to do the right thing wherever we find ourselves. So when we are working for an organization or we run our own practice, we need to respect the culture within that organization, which needs to be what? Ethical. Because when we talk about good performance also, accountant helps when it comes to good performance measurement. There are different ways in which we can measure performance. Effective control also is something that connects strongly to the role of an accountant. And you will agree with me that this revolves around themes such as internal control, such as putting in place a very strong control environment. And when we speak about the legitimacy here, we're talking about how the company conducts itself in the eyes of various stakeholders, i.e. ensuring that its operation is legitimate and is seen as such to be legitimate. So these are contributions of Professor King. By extension, Professor King, like I said, is the pioneer founder of the South Africa, or the pioneer contributor to the South Africa King's Report, which is the South Africa Corporate Governance Code. And the code is a principle-based code which is revolving around, or which believes so much about apply or explain. Part of Professor King's contribution is integrated thinking and integrated reporting. Integrated reporting also is a corporate governance mechanism, or it is a governance mechanism because it enables stakeholders engagement. It assists a lot when we speak about stakeholder engagement. It's a report that enhances transparency and accountability, which are essential in building trust and resilience by disclosing how key stakeholders' legitimate need and interests are understood, taken into account, and responded to through decision, action, and performance, as well as ongoing communication. When you look at this word carefully, you will know for sure that as an accountant, we have a role to play when we speak about governance. We have a key role to play. Look at the first line. It says, integrated reporting enhances transparency and accountability, which are essential in building trust and resilience. So as an accountant, when we use all our accounting skills, when we use all our accounting knowledge, both knowledge of auditing, both knowledge of IT, both knowledge of taxation, when we bring in professional accounting ethics and we build all of that together, use it to produce a report that is concise and supports understanding of all our stakeholders, assist our stakeholders or company stakeholders to understand what is going on in the corporation, we said we are building trust as an accountant. So these are part of the contribution of Professor King, and that is why I like to refer to the word governance is king. And you see, for us to appreciate that integrated reporting is one of the future of accountant, or is the future of corporate reporting, and obviously to demonstrate commitment to integrated reporting, the Institute of Chartered Accountants of Nigeria in October 2019 established what we call the Nigeria Integrated Reporting Council. This is an initiative that was led by the Institute with very significant contribution of Dr. Innocent Okwaza, the Vice President of Institute of Chartered Accountants of Nigeria. And Innocent in his word, Dr. Innocent in his word said, I believe that with the inauguration of the Nigerian Integrated Reporting Council, Nigeria has joined with countries who are at the forefront of better corporate reporting in its capital market. So now, again, you can see the role accountant is going to play when it comes to corporate governance. So we're going to play a key significant role, i.e. supporting organization, assisting organization, helping organization to prepare what we call integrated reporting, to support them in achieving the integrated reporting objectives as an organization. What is integrated reporting? It's a report that is concise communication. Integrated reporting is a concise communication about how an organization's strategy, governance, performance, and prospect in the context of its external environment leads to the creation of value in short term, medium term, and long term. So in essence, what we're speaking here is that You as an accountant cannot exclude yourself from governance within an organization. You need to recognize that we have a key role to play when it comes to strategy, when it comes to governance, when it comes to performance and prospect. And one of the mechanisms to do this is to appreciate the thinking around integrated reporting, which Professor Mervyn King is pioneered together with many other countries and institutions believing in such initiatives. So many thanks to Dr. Innocent Kwaza for what he's doing around integrated reporting alongside with our Institute of Chartered Accountants of Nigeria. So theorizing corporate governance. As I said at the beginning of this lecture, as a researcher, we speak so much about theory. We like to talk about theory. There are two key theories I'd like to share with you here, which is the agency theory and the stakeholder theory. Basically, we as an accountant, we need to understand that corporate governance issues emerges as a result of separation of the separation that happens between the principal and the agent. In modern corporation, you find out that you have a board of directors, you also have the shareholders. So there's always separation between the shareholders and the agent. So this separation has lent itself to what we call agency problem. But however, this is a narrow way of viewing corporate governance. When you look at relationship that exists only between the principal and agent alone, we call that relationship agency theory. So when you approach governance from this perspective, we say that you are approaching governance from a narrow perspective. That's what one tends to say. But approaching governance from a wider perspective is to look at governance from, what's it called? From, pardon me, is to look at governance from, 1 second. I think we'll have issues with upgrade. So let me just quickly see if I can round on the, how many minutes? So it's to look at governance from a wider perspective. Pardon me. Well, I think we're having just to look at governance from a wider perspective, and the perspective is to look at it from the perspective of shareholders' perspective, which sort of recognize all the stakeholders that are involved in governance. And this is my recommendation to you as an accountant. So in terms of the purpose of business, why are we in business? Professor Alex Edman spoke about the reason why we're in business. And one of his reasons is that a company is not only, so he has a TED Talk video where he concluded that the purpose of a business is to both create value and of course to make profit. I mean, it's to both make positive impact to the society and also to make a profit as far as possible, or as much as possible that it can make. So these are the purpose which Alex Edman. So it's not a one-way thing. It's not just to sort of create value alone, but also to make profit. So this is the purpose of a company. An accountant should respect that. Accountant should take that into consideration, that when you sort of find yourself in an organization, you are not only supporting the company to making profit, but you are also looking at how you can help the company to add value to the society and make positive impact, create value to the society. So what are the accountant's role in governance? I've sort of put together this table, which I revised from Shield 2008. So it's a revised table, which was put together by Shield 2008. So when you look at the roles of an accountant, in terms of remuneration, we have a role to play. Our role is to look for a way where we can streamline the payment, work with management with prior studies so that salary can actually reflect remuneration that is not too much and that is not too low. There could also be issues around governance, issue around ownership, okay, in which case the majority shareholders are trying to use their significant influence to impact or to sort of chance the minority shareholders. So we said that we as an accountant can help to reduce the gap by appropriate disclosure of minority interest. So we should ensure that we put proper disclosure out there. Also, we could have performance issue revolving between board and director. We could also have a situation whereby regulation is not fit for purpose. So we said accountants should, together with accounting professional body, help regulatory authorities to firm up their rules, regulation, and to make contribution to rules and regulation. You and I know what is going on with CAMA 2020 now, what is going on. So sometimes regulation might not be fit for purpose, so accountant has a major role to play in that issue, in that situation. Where there is performance issue as well, we said accountant has a major role to play. You may help management to carry out the policy timely by strategic planning and budgeting so that at least performance issue can come down. Also, when it comes to stewardship and accountability, remember I spoke so much about building trust. This is a governance issue because of information asymmetry. Your role there may include helping to sort of strengthen the internal control system such that accountability can be transparent and can, of course, be reliable. Also, you could have regulatory issue which borders so much around compliance to IFRSs, compliance to Nigerian CAMA Act, compliance to tax law. So you could have compliance issue. What do you do here? You sort of act as an expert, talking to the management, warning them. Remember, one of our role as an accountant, or one of what we do, is to play as to act as a turnaround expert, corporate restructuring, and all that. So when there's compliance issue, you can step on board and speak to them and say, look, we need to do this, we need to do this, we need to do that. So that's part of our role as an accountant, enhancing governance. Also, she make recommendation that there could be corporate governance issues within customers' interest. That is where customer actually desire a certain level of, or a certain value, but of course, or a certain quality of product, but of course the management is trying to reduce costs in terms of not giving very good quality product out there. So we said this is an issue of alignment of interest. And we said accountant can play a significant role here through statements such as value-added statement, board commitment to customer in order to reduce the satisfaction of what? Of customer. Well, what are my reflection and what are my reflective thoughts? My reflective thoughts and my concluding remarks are that, look, we need to understand that accountant plays significant role in governance. Hence, we should go out there, support company to approach governance from positive perspective, just as the ICAEW have put that together. And our governance responsibility should include the fact that we need to let our organization know that governance should connect and reflect the society. It is not enough to just pursue compliance. We must ensure that the operation of our company, the operation of our organization is very much friendly to the environment, very much friendly to society, the social issue, or in line with the social actors, i.e. the staff, and of course to ensure that there is good governance within our organization, i.e. making sure that issue of fraud, anti-robbery, anti-corruption, issue like bribery, and all of that does not exist. So also, don't forget that when we embrace good governance, there's benefit to it. I should argue that corporations that genuinely recognize and embraces the principle of good governance will derive enormous benefits, such as availability and lower cost of capital, ability to attract talent, clients, and business partners, involve competitiveness and financial performance, improve competitiveness, financial performance, and lastly, true sustainable long-term growth. Now to conclude, as an individual accountant, ultimately, we should be acting as governance professional, and we must recognize that governance is a journey and not a destination. And when I mean governance is a journey, it means that we can't just pay regards to issue today and say we've complied, we've tick all the boxes, and then we don't have responsibility going forward. No. Governance is pretty much a destination. It's pretty much a journey and not necessarily a destination, which means we have to continue. It evolves. It evolves. Yeah. So we will all be shocked that in a minute, what we will get from Nigeria is things is going to change. So thank you so much for listening. And these are ways to get in touch with me. I'm happy to provide the podcast or the videos to all members of the District Society. I thank you so much for giving me the opportunity. Thank you. Any question, please?